Okay, so the potential trades that I could have taken is that so when the market opened up and pushed lower, swept liquidities and pushed into this inflation rate news, a 15-minute bullish Ferrari gap. There was a 1 minute reaction that I could have taken advantage of, which is so price did a 1 minute break of structure to the upside, aligned with the bullish inversion gap to the upside, alright? So that can be my entry to the upside right here. And the second trade opportunity that I could have taken is that um, price broke structure and prices retraces back to the bullish Ferrari gap right here. So this is a bullish price retraced back to the bullish Ferrari gap after the break of structure and then bullish reaction to the upside. So that's where I should enter, which is right here, right? And if I just hold it up, it could have been way better trade. And on the second trade that I could have taken, potentially could have taken is that, okay, if I, okay, this is a break of structure with the Ferrari gap, reaction to the downside. Yeah, if I taken the trade, I would have lost the trade, okay? Because there was an SMT. So this is low at 10:45 on a higher low on Nasdaq. That must be lower low on ES. Okay. So let me see. That must be lower low on ES. Yeah, there you go. So that's a lower low. Okay, so first trade is this trade. Okay. And then the second trade is would be this one, breakup structure, and and the third trade would have been a loss, which is right here. The entry confluence was pretty solid. Swap liquidities, breakup structure for a while, gap reaction. And the third trade that I could have taken is that after the expansion overbought condition, prices retraced into this 15-minute, like like higher time frame bullish for a gap. So how the how the how it could have told me beforehand it already reached it. Okay, so 1 minute break of buy sell. So 1 minute break of structure to the downside, retraces back to the bearish Ferrari gap, and then reaction to the downside. That can be my entry. Okay. Okay, this is 100% can be my entry, and maybe I just could have take some partials off or close position off of the momentum off of this 15-minute bullish Ferrari gap. If it drops, it would drop. But here we broke structure to the upside, so that's pretty good sign to be close my position all the way up here. Okay. So yeah, and the second trade that I could have taken is that 15-minute bullish Ferrari gap. We broke structure to the upside. Okay. So that's a thing. So take full profit at here. Okay. And the second trade and the next trade that I could have potentially taken is that we made a 5-minute bullish BPR off of 15-minute bullish Ferrari gap. So that's a really good sign, bro. So as you can see in a 5-minute time frame, um, prices retraced back to the 15-minute Ferrari gap. We did 5-minute inversion gap, I mean bullish BPR to the upside. So if I have a 1 minute break of structure or like Ferrari gap, or if there is no Ferrari gap, I need to I need to see the like how engulfed the break of structure did. or does it have weak? Doesn't have it? Okay, those type of questions I need to ask. Okay, so we retrace it back to the bullish BPR. I need a breakup structure, which is right here. High gets broken right here. So sell, buy, sell, buy. So this is broken right here. Stop loss below the low. And just let it run, bro. Just let it run this shit. Just let it run, okay? So these are the potential trade opportunities that I could have taken, okay? On NASDAQ, so potential trades, these are all of them, all of them would have been profitable, like one, two, like one loss, one, two, three, four, five. And I took this trade long position off of, okay, breakup structure, but we reversed breakup structure to the upside, so why would I buy that? So there's no reason. I just bought it against the 1 minute breakup structure, against the 1 minute intention to retrace to the 15-minute bullish for while. So that's kind of, you know, it's kind of weird. So continuing, there must have been some trade opportunities too. So we swept out these lows and price broke structure right here. We completely inversed, just ate this bearish Ferrari gap. That can be my entry right now. Okay. And the second trade opportunity was that we generated some liquidities off of here. Okay. We kind of going in sideways, so there shouldn't be no trade. Okay. Yeah, there's no trade. So off of here, price swept and generated some liquidities. Okay, and then we had a huge displacement lower, so that's a really good sign. That's a really good sign. Huge displacement retraces. Yeah, as you can see, price never did price never dropped like 100 pips in few seconds, right? Price did it after the retracement of Ferrari gap, so that's a thing, right? And then price retraces back to the bearish Ferrari gap, bro. This is the best reaction I could have ever take. I could have price market could have the best confluences that market can give me this reaction. So breakup structure plus bearish Ferrari gap, retrace to it, huge bearish engulfing candle. That's lovely. And then stop loss above the high. So where I'm gonna target is where price push high, which is it can be equilibrium. Okay, it can be equilibrium. It can be 15-minute bullish for Y gap. In a 5-minute time frame, it can be, yeah, we have this low, prices retrace to it, completely respects it. So yeah, these are the things. So is there any chance that I might have closed my position early? Okay, so let me think. So is there any chance that I might close it early? Okay. Huge engulfing candle to the downside. Push lower. Okay. So maybe there's, yeah. So maybe I should just wait for the equilibrium to get hit. Okay, equilibrium, which is right here. And if I bit more risky, maybe I should have put it right there, but it's kind of too risky, so no trade there. So prices comes back to the deeply retraced into this 15-minute range, and then price pushed higher. Low to the high. That's optimal trade entry. So yeah, okay. Okay, in the second trade, after prices retrace it down into it, there must be some entries off of here because let's see. Sell, buy, sell, buy, sell, buy. So we broke structure right here with the Ferrari gap. And we did broke structure again. So that can be some entries, okay? Okay, and when price retraced back to the equilibrium, is it like 5-minute bullish Ferrari gap? Yep, it is. Price actually did bullish BPR right here. So this is again. So this was a 5-minute bullish BPR2, and this one is the 5-minute bullish BPR2. So that's a 5-minute bullish BPR. So tabletin bullish BPR 일때 봤습니다. tabletin bullish BPR price is retraced back to the 5-minute bullish BPR, and I want to see some bullish reactions to the upside, alright? Okay, so bullish reaction, I entry off of it, stop loss below the 5-minute bullish BPR. If price dip more lower, even after the equilibrium, even after the bullish BPR got formed, just price shouldn't do that. And then targeting the previous day's highs. Okay, so this can be my trade. And after that, we never came back to the equilibrium. Buy, sell, buy, sell, buy, sell. We just broke structure to the upside with the no, like, you know, with no reaction off of Ferrari gap, and we did broke structure to the upside again right here. Okay. Okay, and then we pushed into this. We pushed into this. We pushed into this 1-minute bullish Ferrari gap, and damn, it's completely respected. Maybe even entry off of here. That would have been a good trade for sure. Okay, retrace back to it. Where's breakup structure? So there's a. Oh, come on, man. So there's a buy, sell, buy, sell. So there's a breakup structure. Yeah, that can be my entry, right?